Welcome to the Big Mike Fun Podcast. I'm the Big Mike Zlotnik, and today it is my pleasure and a privilege to welcome Owen Lynn with Advanta IRA. Hey, Owen.
How's it going, Mike?
Thanks for coming on a podcast. And Clearwater, Florida is a wonderful area. I've been there many times. Clearwater Beach is beautiful.
Yeah, Clearwater Beach is great. Yeah, I'm a recent transplant to Florida, but I spent actually most of my life living in Ohio, but it's been great. So I've been down here for about 5-6 months now. But yeah, my name is Owen Lynn. I'm one of the business development executives with Advanta IRA. So currently, I deal with self-directed IRAs. That's the main thing that I deal on a day-to-day basis with, mostly with investment providers and their clients that are looking for a custodian home. Previous to that, spent a lot of time in finance over the last decade or so in a couple of different areas. So I was at one point a financial advisor with Merrill Lynch, worked with TD Ameritrade, Scottrade, and did 401k sales at Paycheck. So that's just a little bit of background.
Yeah, appreciate you sharing. So how do you like Florida after Ohio? A little bit warmer, I assume?
Yeah, I lived in the snow belt, so literally I've wrecked 3 cars over the years living there just because the snow was so bad. You get like 2 or 3 feet of snow at a time sometimes. So it's a lot better. There's no complaints on my end being in Florida right now.
Few people complain about that. And now, how did you wind up with Advanta IRA? They've been around for a long time. You've joined them relatively newly.
Yeah. So I ended up going there. So previously it was with Paychecks doing institutional 401k sales, and I missed the self-directed IRA world. I previously was at Equity Trust for almost 5 years, and then I went to Paychecks to join their team and didn't really like it as much. And I just felt the draw to go back to self-directed IRAs because that's what I'm really passionate about. So that's when I got linked up with Advanta IRA, and I made the decision to come down to Florida and move. So Advanta IRA, we've been in business for 23 years now. We just crossed over the $4 billion threshold in assets under custody. So we're excited about that momentum. And currently we work with about 17,000 clients nationwide that are directly under our roof. So we deal with everything from real estate to private equity, private lending, precious metals. So all the alternative assets that aren't like stocks, bonds, ETFs.
Yeah, understood. So what's different about Advanta versus like Equity Trust? What's your differentiator? Just quick competitive advantage. What do you see in Advanta different from Equity Trust?
Yeah. So it's a big difference in customer service model. So with us, we have over 25 account managers. So every client that comes in our door is assigned to a dedicated account manager for the lifetime of the account. So we don't do like call centers. We don't do the, shoot a message and wait on hold or, talk to a chatbot, anything like that. So that's a big difference overall. Honestly, I remember, I've worked at other custodians like Equity Trust, and stuff would get backed up. There would be, just kind of an overload of people that weren't able to get to our agents. So with us, it's just uniform across the board, and everybody's happy for the most part with the service. So that's really the big part of it.
What's changed in the world of self-directed IRA custodians in the last couple of years? Self-directed custodians like Advanta, Equity Trust, and many others operate in the space of alternative investments, real estate obviously being a big part, and seen some market changes, market reset. I assume probably seeing some level of transaction volume slowdown. I'm just curious, what are you seeing? What's changed last couple of years?
Yeah, I'd say on the real estate side of things, that's probably like the biggest difference overall. So if you go back, 20, 25 years ago, people were buying real estate simply to like live in that property, or they were individual buyers that were buying vacation homes or investment properties. We've seen just a great shift overall of people that are investing into private real estate syndications and private equity, just due to the institutional buy-up of all those properties nationwide. It's been quite a difference, especially after COVID. So we've seen a pretty dramatic increase in the amount of people that are going into private real estate funds.
Yeah, so that happened probably right after COVID, and The question is, have you seen quite a bit of slowdown after the market reset with interest rate spiked? Because it has transpired on the multifamily front in a big way, and number of single asset built to rent homes and other just turnkey properties. I'm sure you've seen quite a bit of slowdown there. Maybe I'm wrong. Maybe people are still buying them investing at a brisk pace. But just curious if you've seen specifically not a 5-year picture, which is post-COVID picture. Yeah, if you break it into two periods, this 2021, 2022, when everything was just so wonderful. And then things changed when the rate spiked. I don't know if you've seen any differentiation on that front.
Yeah, I can give you like the exact numbers. This is over the last 5 years. So since 2021 or 2020, we've seen a 350% increase overall in real estate funds. So those would be like your Ashcrofts of the world, CrowdStreets, and private real estate funds. And we've seen over a 40% decrease in actual tangible real estate. So those are, solid numbers inside of our company, at least that we've noticed with our clientele. So there's definitely been a pretty dramatic shift with people that are trying to get away from it. And it's understandable, with the interest rates being so high, and then just people that if they have the ability to go into a fund that's professionally managed and they can make a similar rate of return that they would on just owning the real estate in a tangible sense, that's where, obviously it makes sense that people are ultimately going that direction. But, we are seeing like a massive institutional buy up of all these properties as well. So that's starting to deplete a lot of the inventory standpoint. So when we had the Secure Act pass in 2022, that did pass a new account type. So we call that the STEP Roth IRA. So that was a new account type that was introduced in self-directed IRA world. As far as other updates that I can share with you, I mean, we're seeing a lot more private equity across the board right now, a lot more precious metals transactions as well. But that's really the only items that I would have to update you on.
Are people still buying gold, silver a lot? Because like you said, that's actually an interesting observation. As those asset classes have done remarkably well, precious metals, obviously, are you seeing people still bullish in buying a lot, or it's more of a holding pattern?
So seeing a lot more purchases still. So precious metals has been going strong for the last 3-4 years, even after COVID. So we're still seeing year-over-year increases every year in the amount of people that are coming on board to buy metals, and the amount of transactions continue to go up as well. So it's been a pretty steady uptick in activity for precious metals.
I'm curious if you've seen inflow of capital out of Wall Street into the alternatives. The Wall Street has done remarkably well, right? It's just kind of had a blip in the post-COVID world and then a quick correction, and it's been in a huge bull run ever since. And the alternative investments, what we do in real estate and what you offer as a service, very much depends on sort of on people getting a little skittish about the Wall Street. The nervousness is not there. It's a huge complacency. So I'm just curious if you're still seeing outflow or inflow of capital into your ecosystem, or it's slowed down with the stock market being this strong.
Yeah, it's still the number is still going up, even though the stock market is doing so well. We're still seeing the amount of capital increasing as well, not just based on the number of clients coming in, but the amount that each investor is bringing in as an individual. That number is continuing to go up. So there is a lot of economic uncertainty right now as well. So that's why we're seeing a lot of the increases in precious metals purchases. See a lot of money that's being funneled into cryptocurrency specifically as well. So that's continuing to go up. And interestingly enough, we are seeing an uptick in people that are setting up offshore accounts over in Europe, so they can basically park that money into the euro. So that's actually a new category that isn't really that known yet in the public, but we are seeing a lot of people that are starting to shift money overseas as well into offshore accounts.
So hold on. So US based folks with the self-directed accounts here are buying euro, some kind of FX speculation that the euro relative to the dollar is going to strengthen. Is that what's happening?
Yeah, that's exactly it. So basically, there are certain banks over there that will facilitate these transactions. So that's one of the the laws in most of Europe is that if you're going to take IRA dollars from the United States and then shift it over to Europe, an SEC registered advisor has to be attached to the account, essentially, even if it's just a standard bank account. So, but we are seeing a large number of investors that are starting to do that as well. So basically parking that cash overseas. And they're doing that because they believe that the euro is going to go up in respect to the dollar, essentially. So that a lot of that activity is happening.
Folks are holding assets in euro and banks, not buying assets in Europe, right? That's what I heard from you.
Yeah, that's correct. Yeah. So it's a mixture. So they are buying assets in Europe as well, but we're seeing a lot of people that are just parking cash over there in the euro as well.
It's interesting. I wasn't even aware. Appreciate the education. I wasn't aware that you can invest outside of the United States, and obviously this is a very simple investment: buying euro and holding it in their, in European bank accounts. So what else? What else is new? I mean, you mentioned Roth IRA, right? That's what I heard from you. You offer that. Any other innovations? Just things that are different in the last, I don't know, year or two, from the account perspective? Anything in the solo 401k, maybe Roth versions, or any educational IRA accounts? Just curious if if you see any innovations and people doing different things.
Yeah, I mean, I can definitely speak to more creative things that we're starting to see as well. But just to touch on the SEP Roth IRA, so that came out in 2022. So that, I think that's a great vehicle. It makes a lot of sense for small business owners to go with the SEP Roth IRA. So essentially with the SEP Roth, you avoid having to do a backdoor conversion like you normally would with a normal SEP IRA. So if you can contribute up to $72,000 per year to a SEP IRA. So if you wanted that to all be Roth dollars, you would first have to put it into the SEP IRA itself and then have a separate Roth that's basically open and next to the SEP IRA, and then do that conversion internally to get that all Roth dollars. And so what the Trump administration did is they basically just they let the SEP Roth IRA come into existence through the Secure Act. So that basically just allows you to go right directly into the Roth component. So you're not having to do like some form of conversion on the back end. So I've seen a lot more people that are becoming interested in it. A lot of financial institutions don't offer it yet. So like a good example is Charles Schwab still doesn't offer like a SEP Roth IRA. So some of the big ones don't. But it's a new account type, and that's something certainly that we're offering as well. As far as like more interesting and creative things, we're starting to see a lot more people at a ground level forming basically their own special purpose vehicle LLC. So basically, that's an LLC entity that's set up, and it can be a mixture of IRAs, Ks that are inside of the LLC. And then we're seeing a lot of people that are going to buy larger commercial property. So a lot of like strip plazas being bought, and it's basically groups of people at the ground level, investors that are piling into LLCs together to facilitate those transactions. I've seen a lot more solo 401k plans as well that are going that direction. So they're basically doing like larger commercial transactions instead of these specially built LLCs.
So it's IRA LLC, but on steroids, where with partners, right? That's what it sounds like.
Yeah, so it's not like an institutional grade like syndication, and it's not, but it's somewhere in between that and like a normal customer. So it's generally people that are forming these investment groups, and then they're going and they're buying typically more commercial grade property, but strip plazas specifically, that seems to be a hot item, and then storage facilities as well. So we're seeing a lot of that.
Interesting. Yeah, it's I mean, traditionally it's done, of course, through a syndicated structure, but if it's not syndicated structure, it's just a few people getting together to buy it, then yeah, you can form a new partnership. But it's not people creating IRA LLCs, which is basically checkbook LLCs, and then doing things within that. You're saying that they're forming SPVs, special purpose vehicles, to acquire some assets with the
And so it's basically a checkbook LLC, SPV, and you'll hear a lot of attorneys refer to them as SPV, special purpose vehicle LLCs. So it's essentially it's an LLC. You would have checkbook control. Anybody that is deemed to have checkbook control inside of the structure certainly would be able to transact. But basically, it's just an extra large. You can think of it as just an extra large checkbook LLC, and there's multiple people that are going inside of it. I've seen numbers, even like 10, 20 people inside of these before that are buying multiple things and buying multiple properties. So that's just something that
It's a partnership, right? From a operating perspective, it's a partnership. Still an SPV, and then the investors, they just own their fractional interest, and there's got to be an operating partner or somebody's running the show. That party is in control of the checkbook and obviously acquisition of an asset. It's interesting that it's not a classic syndication. It's just more of a form of partnership. And I assume these folks actively involved, they all get together and they decide, hey, we want to all be sort of self-directing to buy the shopping plaza.
Yeah, exactly right. Yeah. And, just seeing more and more of that as well. So, but yeah, it's been interesting over the years just seeing like all the different things that you can do inside of self-directed IRAs. You mentioned that you weren't aware that you could do international real estate. We're starting to see a lot more of that as well, specifically in South America and Central America. So just seeing a lot more activity outside of the US as well, just overall in different areas, but a lot of real estate is starting to be acquired outside of the United States just because the real estate here has gotten so inflated and so expensive over the years.
Yeah, it's interesting because now folks need to be aware of the local laws, obviously protecting their investments and then taxation and all that fun stuff. Because the US IRA investor might not have the same tax advantages acquiring something in another country. Because I'm just not sure how that works. Here, you invest from a self-directed IRA. It's a tax-exempt vehicle, and the asset appreciate. You benefit from the appreciation, tax-exempt or tax-deferred.
Well, it varies basically country to country. So the small business accounts that you're going to set up in a foreign country, it just depends on that particular country's laws. So, for example, if I set up an LLC structure in Mexico, the Mexican equivalent to an LLC is referred to as a limitada. I'm still going to get the same tax deferred status that I would in the United States, so not much is changing. It's a different version of an LLC, and essentially a lot of these countries will have that different version. So you do have to research that particular country that you're looking to invest into and just see, what small business plan you can set up, in that particular country.
The best type of a read that folks should do to get themselves familiar, maybe have some white papers from the really basic stuff to more advanced topics.
As far as books are concerned, there's really not a whole lot that's out there that's new that pertains to self-directed IRAs. There's some older books that have been published over the years, but really, if you're looking for research on this, it's generally best to go to the Custodian website or go to like Advanta IRA's website. And we have like full write-ups on all those transactions right there. So it makes things a little bit easier if you're looking to like research something specifically.
Yeah, I appreciate that. There were years ago, I remember classic books, and you got to dig them out. On the shelf behind me, there's probably a few of them years ago. They talked about building wealth through self-directed IRAs, but the basics are still the same. Yeah, I appreciate you coming on a podcast. What's the best way for folks to reach out? Obviously, Advanta IRA website, or if you have an easy way for you directly, how would folks reach out to you?
Yeah, my direct line at the office is 727-10095. And then it's right online as well. So if you go to Google and you type in Advanta IRA and then you just type in Owen, it'll pop up with my direct page right there with all the information. So if there's any specific questions on any structuring that you're looking to do or any specific investment type that you're looking to learn a little bit more about doing, I'm definitely happy to walk you through that.
Enjoy sunny Florida versus cold and snowy Ohio.
Yeah, thanks, man. Yeah, appreciate it.